Hello guys, welcome back to my channel Trust Whales. In today's video, I'm going to introduce 3 powerful indicators that every trader must know. Whether you are into crypto or Forex, these tools can give you an edge in analyzing the market and making better trades. We'll cover the RSI, Relative Strength Index, the 200 EMA filtered Parabolic SAR, and the Fibonacci retracement. Let's dive right in. First of all, we have RSI. The RSI is a momentum oscillator that measures the speed and change of price movements, oscillating between 0 and 100. Traders typically use the 70 level to indicate an overbought market and the 30 level for oversold conditions. However, one of the most valuable aspects of RSI is divergence. Divergence occurs when the price makes a new high or low, but the RSI doesn't follow along, signaling a possible reversal. For example, if the price forms higher highs, but the RSI makes lower highs, it suggests that the bullish momentum is weakening and a drop could follow. To understand better RSI in bullish divergence, it forms higher lows while the price forms lower lows, signaling potential reversal to the upside. And for bearish divergence, RSI forms lower highs while the price forms higher highs, warning that a downtrend might start. Here we are on BTC chart, and as you can see, a divergence is happening. As you can see, Bitcoin is creating higher highs, but RSI is creating higher lows, so here a divergence might happen. Second of all, we have 200 EMA filtered Parabolic SAR. The Parabolic SAR stop and reverse helps trades determine trend direction and potential reversals. However, when combined with the 200 EMA exponential moving average, it becomes much more reliable, especially on lower time frames such as 5 or 10 or 15 minutes. Here is how it works. The 200 EMA acts as a trend filter. If the price stays above the 200 EMA, it suggests that buyers dominant, and you should look for buy signals from the Parabolic SAR. Conversely, when the price is below the 200 EMA, focus only on sell signals from the Parabolic SAR. The Parabolic SAR dots helps traders determine entry and exit points, but in low time frames, the market can be volatile. Therefore, you need to stay glued to the chart and avoid missing trade signals. Professional tip: in lower time frames, the Parabolic SAR helps spot short bursts of trends, but traders shouldn't leave the chart, as reversals can occur fast. The 200 EMA ensures you avoid whipsaws by sticking with the prevailing trend. Third of all, we have Fibonacci retracement and extensions. Fibonacci indicator helps traders predict possible levels of support and resistance using the golden ratio 1.618 and other key levels such as 23.6%, 38.2%, 50%, and 61.8%. These levels allow you to anticipate potential price pullbacks or reversals during trends. But here is where Fibonacci becomes extremely useful. In wave structures, it aligns with mathematical algorithms to help traders set precious targets, take profit, and stop losses. For example, when a wave retraces to 61.8% level, it often signals the end of correction. And you can place your stop loss just below the 78.6% level to protect your trade. Traders can use Fibonacci extensions to predict how far a trend might go by targeting levels like 161.8% or 261.8%. And also place stop losses slightly beyond the next key Fibonacci level, ensuring you give your trade room to move while protecting it from unexpected reversals. To summarize, we've covered 3 essential indicators: RSI, 200 EMA filtered Parabolic SAR, and Fibonacci retracement and extensions. Each tool plays a critical role, whether you want to catch divergences, spot short-term trends, or predict support and resistance zones. If you enjoyed this video, please subscribe, like, and hit the notification bell. And let me know in the comments how you use these indicators or if you have any question. Thank you for watching.